Do you have $1,000,000 to invest? Have you had a windfall recently due to an inheritance or a liquidation event? Or are you curious how you should invest $1,000,000 if you were ever to get to that point, in order to generate high cash flow that could fund your lifestyle? Once you have $1,000,000, you can have your money work for you in a way that could generate enough passive income to unlock freedom in your life. But it isn't clear how you should go about investing the money. Today, we're unveiling the blueprint for converting a solid million into a profit-generating powerhouse. Before we delve deeper into this subject, kindly check the description below for a selection of top-notch books that have been instrumental in my financial journey. By opting to purchase a book through any of the links below, you're also bolstering this channel, enabling me to craft more content you love. So, let's get started and discover the art of investing $1,000,000 for passive income. The foundation of passive income. Alright, before we dive headfirst into the world of investments, let's get real for a second. Building passive income isn't a magic trick. It's a journey that begins with a rock-solid foundation. Think of it as laying the groundwork for your financial castle. First things first, you need your safety net, an emergency fund. So be sure to put aside at least 6 months' worth of your living expenses before even considering to invest. Next up, let's talk about those pesky high-interest debts. They're like a leaky faucet, draining your resources. It's time to patch them up and get your finances back on track. Remember, you're building a house of wealth. It needs a sturdy base. Creating a diversified portfolio. Now that we've got our foundation squared away, it's time to paint the picture of your financial masterpiece. Enter the world of a diversified portfolio. Imagine your money as a team of players, each with a different skill set. This team isn't putting all its eggs in one basket. Oh no, it's spreading the risk and boosting the potential for gains. So how does this work? Well, it's like having a buffet of investments. Real estate, stocks, bonds, and more. By diversifying, you're not betting everything on a single horse race. You're investing in the entire race course. So, as we discuss the different options, don't think you need to put the entire $1,000,000 into one asset class, but consider how you might diversify across the different assets. Stick around until the end, where I discuss one of the highest cash flow ideas that is rarely discussed. Real estate investments. This isn't just about buying a house and calling it a day. It's a gateway to passive income that can keep flowing for years. First up, we've got the classic rental income strategy. Picture this. You own a property, and each month, like clockwork, tenants pay rent. Cha-ching! But hold your horses. Being a landlord comes with responsibilities. Repairs, maintenance, and dealing with tenants can be a handful. You can expect anywhere from 4% to 20% in passive income with rental properties. This depends on the location you buy, as well as whether you use leverage or a mortgage. Typically, the lower the cash flow, the more risky of an investment it is. Now, if you're into a bit of a thrill, there's another game in town: loaning to flippers. Ever seen those house flipping shows? You can be the bank behind those flippers. Websites like fundthatflip.com connect investors like you to folks who fix and flip properties. Your money works its magic and you get a slice of the pie, plus interest. At the moment, you can earn anywhere from 9% to 12% by loaning your money out to flippers. Real estate private equity can be another great option for passive income. They raise funds from investors to acquire, develop, and manage real estate properties, offering a potentially viable way to generate passive income through distributions from rental income, capital appreciation, and fees. Expected returns can vary significantly, but generally fall within a range of 8% to 20% annually. But be prepared to lock up your investment for about 7 to 10 years, and be sure to only choose operators who have a good track record. Dividend stocks. Alright, let's talk stocks. But not just any stocks. We're diving into the world of dividend stocks. These aren't your everyday roller coaster rides. They're more like steady cruisers that pay you along the way. Imagine owning a slice of companies that not only grow in value, but also share their profits with you. These are the companies that dish out dividends, cold, hard cash that gets deposited into your account regularly. Think about it. You're becoming a shareholder in companies that have stood the test of time. They've weathered market storms and still managed to bring home the bacon. And the best part? You don't have to sell your shares to make a profit. It's like getting a paycheck from your investments. But remember, not all dividends are created equal. You'll want to focus on companies with a track record of consistent payouts and financial stability. Dividend stocks pay anywhere from 2% to 10%. Fixed income investments. Let's shift gears and explore the world of fixed income investments. These financial instruments might not be the flashy headliners of the investment world, but they play a crucial role in any well-rounded portfolio. Imagine them as the steady, dependable sidekicks that keep things balanced. First up, we've got bonds. Bonds are like IOUs issued by governments or corporations. When you invest in a bond, you're essentially lending money, and in return, you receive regular interest payments. They're often considered lower risk compared to other investments, making them a great choice for stability seekers. Bonds can pay anywhere from 1% all the way to 20%, but very high interest bonds are considered junk bonds, which means they are higher risk. Next on the roster, we have annuities. Annuities are like long-term contracts with insurance companies. You make a lump sum payment or a series of payments, and in return, you get a steady stream of income over a set period or even for life. Annuities can provide a reliable source of income, especially during retirement, but they can come with complex terms, so understanding them thoroughly is key. Last but not least, we've got Certificate of Deposit, CD. These are like time deposits offered by banks. You lock in your money for a fixed period, and in return, the bank rewards you with interest. The longer you lock up your CD, the higher the rate you get, typically. At the present, you can get over 5% guaranteed through CDs. Now, let's talk strategy. Incorporating fixed income investments into your portfolio can act as a cushion during market turbulence. They're like the calm waters amidst the stormy seas of financial markets. But remember, while they offer stability, they might not provide the same growth potential as some riskier investments. High cash flow businesses. All right, money magicians, let's shift gears and explore the world of high cash flow businesses, the real powerhouses of passive income. Imagine owning a business that's not just a source of income, but a money-making machine that practically runs itself. First on the list, we've got the laundromat. You know those places where folks wash their clothes? Well, owning one can be like having your own coin-operated gold mine. They can generate 20 to 30% unlevered returns, and if you use a loan to buy one, you could make upwards of 75% per year with this business. Now, let's talk about vending machine routes. Picture this. You've got snack and drink machines strategically placed in offices, schools, and high-traffic areas. People put in their change, grab a treat, and voila, you're making a profit without breaking a sweat. Vending machines can generate more than 100% in ROI every year from the money you put. But you need to make sure the location is high traffic, otherwise the returns will be much less impressive. Car washes are another gem in the crown of high cash flow businesses. Whether it's an automatic drive-through or a self-serve setup, cars will always need a wash, and each wash can be a drip in the bucket of your passive income stream. A car wash, if well run, can give you returns of over 70% each year as well. If you're looking for something with a bit more brand power, franchises might be your ticket. Think well-established names that people trust. From fast food joints to service-based businesses, franchising can offer a turnkey solution to your passive income dreams. Now, here's the kicker. While these businesses can be lucrative, they're not all rainbows and unicorns. It's not just about sitting back and watching the money roll in. There's work involved, managing operations, ensuring quality, and sometimes dealing with unexpected hiccups. But when done right, these businesses can churn out a steady stream of cash that can be a game changer for your financial future. All right, time to get it all together, create your investment strategy. This is the blueprint that guides your journey to passive income success. First, understand your goals and risk tolerance. Are you aiming for short-term gains or long-term stability? Next, diversify wisely. Mix and match your income sources. Real estate, dividend stocks, fixed income investments, and high cash flow businesses. Spread the risk and let your investments work together like a symphony. A good mix of $1 million in the assets we've discussed today could generate about $100,000 in passive income annually. But remember, the higher the expected income, the higher the risk. With that, thank you for joining today, and if you've enjoyed the video, Please like and subscribe. Stay calm and compound on.